Thank you especially for coming and for being a part of this conversation. So for those of you I don't know, my name is Shane Yonston. I'm a financial planner. I'm an investment advisor. I'm the founder of Impact Investors. And I've been focusing on socially responsible investing for a little over a decade now. When I got started about 11 years ago, I was working at Wells Fargo in their private client services division. And it was about a year into it, and when I started to feel a little bit unsettled, maybe is the right word, with the work that I was doing. I loved and love still following the markets and researching funds, and I love working with people and helping them achieve their financial goals. So that all was very good. But I had done my undergrad studies in global studies, which is basically international politics and economics, and I had learned about really it's kind of post-Cold War trends. So what happened after this dichotomous world of the Cold War was? Well, at the end of that, in the 80s, we're talking about capitalism and democracy reigning the day around the world and opening up markets and setting up trade agreements like NAFTA. And so what was going through my mind at the time, I was thinking, okay, well, we've got this trend known as, have you guys ever heard of the downward spiral or the race to the bottom? I guess it could be used in other contexts. But in the context of geopolitical economics, which is where I was coming at it from, we were seeing, and we have been seeing, companies outsourcing all their manufacturing and their sourcing of goods and services from countries that could provide the lowest cost, kind of the lowest, what do I want to say? Yes, right? So countries, especially like in Latin America or in developing worlds, were incentivized to lower their standards, lower their labor standards, lower their environmental standards, make it really cheap to attract foreign capital. And I thought to myself, well, this is not a sustainable business model. Eventually, people who are being oppressed, who are being paid an unlivable wage, they revolt. And eventually, our ecosystem breaks, right? You can only extract so many resources before the balance of our ecology, it just doesn't function anymore. So it's not a sustainable business model. It doesn't make sense long term. Not only that, it doesn't feel ethical. So I'm helping these people invest their money in companies that I didn't necessarily agree with their business models. And so I started doing some research. And I learned about this whole sector of the investment world called socially responsible investing. And I thought, aha, I'm not the first one who's thought of this. There's a whole group of people out there who've been working on this for decades and have come up with some really great investment vehicles, really great funds that have had some really great successes. And so I spent about 6 months putting together a business plan, and I looked at things like the United States Social Investment Forum's Trend Report. And this is our trade organization based out of Washington, D.C., and every 2 years they come out with a Trends Report, which shows a lot of different things. One of the things it shows is that year after year, more and more money has been flowing into socially responsible investments than have been flowing into the broader market. And I looked at things like the Moskowitz Prize, which is an annual prize given by the Haas School of Business up in Berkeley. And it's a global academic prize awarded to professors of finance at Wharton and PhD students. It's a rigorous academic prize. And what they're looking for is they're looking for a correlation between companies' social and environmental policies and their bottom line financial return. Right? So you can go onto their website and you can find all this academic research. I plugged some of that into my business plan. And I looked at things like actual funds that were performing very competitively with their non-socially responsible counterparts. And I looked at the demographics of San Diego. And there's a lot of wealth in this community. And there's some philanthropy. Maybe there could be more. And some of you guys in the nonprofit world could argue that we could be giving more to the nonprofit world. But my argument was, why can't we merge these two? Why do we have to invest one way and then give away in another way? Why can't we kind of take these two concepts and blend them together? So I took this business plan to my manager, and she said, I think she was being very polite. She kind of held back a little bit of a chuckle, but she said, this is not a good fit for us here. Why don't you tell your clients to invest in traditional funds? They'll make more money, and then they can donate the profits to causes that they care about. And this was the first, I've heard that many times since then. This is my first time hearing that, though, and I was beside myself. It just doesn't make any sense to me. So you're telling me I should invest in profit from tobacco and then donate to lung cancer research? I mean, doesn't that seem inefficient and a little bit ludicrous, right? So I took my business plan and I went to UBS, I went to Morgan Stanley and Merrill Lynch and Smith Barney, and I got very similar responses. And so I decided at that point that I would start my own business. So I went independent, and that was in 2005, and I've been focusing on social responsible investing ever since. And some irony in that is a couple years later, I got a phone call from a recruiter, and I got to talking to her on the phone, and I said, well, who hired you? And she was recruiting financial advisors specializing in socially responsible investing, hired by Wells Fargo, right? Yeah, I laughed out loud also. And of course, I passed on that opportunity, and just the other day, this week, I showed my wife, she's here in the back. We have this headline in Investment News magazine, Missing on Impact. Advisors lag in embracing socially responsible options sought by clients. Right? So this is still an issue. Needless to say, though, these bigger players now are getting on the bandwagon. Morgan Stanley has got an Impact Investing Institute out in North Carolina. Merrill Lynch has got a socially, well, they don't call it socially responsible investing. That term is kind of out of vogue these days. But they are seeing the writing on the wall, which is investors we want more than just a financial return. We want more than just a profit off the business as usual model. And we're starting to put that demand to work with our dollars. So I tell that story partly as an introduction to myself, why I'm here moderating this panel, but also as a broader segue to the topic that we're talking about tonight, which is the movement from fossil fuels to renewable energy, from, dare I say, the dirty economy to the clean economy. And it's a huge move. This is a huge move, and we're just at the beginning of it. So all of us in this room, we're on the cutting edge just for being here and thinking about this, whether you're thinking about your own investments or you're interested in the policy initiatives or CalPERS or your university's endowment. How we invest our money, how we allocate our dollars makes a difference. And in Masada, in your email, you said it's the money. I think you said something like, it's the money. You didn't say stupid, but you said something like, money talks, right? So this is an important topic, and I'm glad you guys are here. And I want to get started by introducing our first speaker. And what I'm going to do here is I'm going to introduce all of our speakers just very briefly. And so you got to get a sense of who's up here. And then I'm going to let them do a 5 or 7 minute presentation about the work that they're doing. And then we'll do a Q&A. And I've put cards on the end of tables. You don't have to use them, but it might help us facilitate a Q&A. If you think of a question, you can write it down on your card. And Stephen, where are you sitting? Where'd you go, Stephen? There he is. If you don't mind, help me out. If you have a cue card, you have a question, holding up the air, Stephen will grab it and he'll bring it over here. And that way I can organize the questions in queue. And we'll do most of the presentation with you guys dialoguing and answering your questions on the various topics. Sound good? All right. Okay, so we'll start with Nicole. And like I said, I'll introduce all of them. Nicole Capretz, I've probably known you for about 10 years now. And she's, a lot of you probably already know her. She's a huge activist locally. And she's now founded the Climate Action Campaign, which is focused on implementing and then becoming a watchdog for local legislation, the Climate Action, the Climate Change Plan, simple name, Climate Change Plan, and locally here that's going to be voted on early next year. And so she's going to be talking more about from a policy legislative side of things. Then we've got Neil Stallings. He's vice president at Green Century Funds. And they are a mutual fund, but they're not your average everyday mutual fund. They're a socially responsible mutual fund. And they've been very outspoken on divestment from fossil fuels. They were founded by a group of environmental advocacy groups about 25 years ago and based out of Boston. Then we have Masada Dissenhouse. She's with the local 350 group. I'm not going to say 350.org. And if you don't know what 350 is, you're going to be pretty excited about what they're doing. They're very focused on divestment, and it's a global movement. It's a global organization, 188 countries, very focused on grassroots advocacy, and they're trying to put pressure on the state pensions and local pensions, and she'll get more into the details of that and the work that they're doing. And then finally, we've got David Scher, and David Scher is the co-founder of a really exciting clean energy, renewable energy fund that is investing in existing wind and solar projects that are selling their renewable energy to off-takers like utility companies, for example, that are mandated to get a certain amount of their energy from renewables, and providing a stable income stream for investors, which I really like. It's different than, if you look at the renewable energy sector in the publicly traded market, it's extremely volatile. So what David has designed is a fund that gives us access and opportunity to profit from the clean energy market without all of that bumpy volatility. All right, so that's our panel. We've got some private sector, we've got some legislation, we've got some advocacy, and the reason why we want to have a panel like this is because this is a dynamic challenge, right? This is something that we're going to have a grassroots movement. We're going to have to move our money and our public pensions, and we're going to have to, vote for legislation and call our representatives. And so this should be a good talk. Without further ado, Nicole, why don't you tell us about the work that you've done?